An investor looks for two things: yield or return and price. The price can vary and the yield can vary, or the both can be safe. If you want something that's safe in both regards, you look for treasury bills and CDs available at banks and brokerage firms. If both are risky, meaning probably a higher yield and greater return, you'd look for common shares, and those are available at brokerage firms. If you have a price that varies, but the yield is pretty darn safe, good for retirees, those are preferred shares and bonds. Money markets and passbook accounts, on the other hand, the return is variable, but the price is safe. Here's an example of a common share certificate, and here's an example of a preferred share certificate. Most people don't receive the certificates and instead hold them in what's called street name, meaning a debit and credit entry. Now at a bank, you'd look for an FDIC and get regular statements with those entries, and likewise for a stockbroker and bond broker, but in this case you look for SIPC. In street name, these are more convenient and accessible in the case of an emergency. Whereas if you took delivery of the certificates, you'd have to put them in a safety deposit box and worry about them and so on. So I recommend putting your securities in street name.